Wendel, one of Europe's leading listed investment firms, held its Investor Day. Frédéric Lemoine, hello.
Thank you for having me.
You are the chairman of the executive board of Wendel, and this Investor Day was a chance for you to update us on the levers for growth inside the different portfolio companies. What are some of the takeaways?
Yeah, that was really the motto: growth, growth, growth. We live in such a sluggish environment, especially in Europe, that we need to look a little bit beyond to North America, which is growing nicely, to Africa, where we are investing heavily, to Asia. And even in France and Europe, we demonstrated this morning that a number of companies are growing in a sound way because they are just based on the good economic models. So we had a number of our CEOs, the CEOs of the companies in which Wendel has invested a long time ago or more recently. We started with Didier Michaud-Daniel, the CEO of Bureau Veritas, because it was interesting to show to our financial analysts, to our investors, to our partners that Bureau Veritas has still a lot of growth drivers supporting its development, both organically and externally, with a lot of companies that are good targets to complement their offer. So that was one model, and then we reviewed all our non-listed companies, and there are as many growth models as there are companies. When you take a company like Stahl that has just merged with Clariant Leather Services in the chemicals for the leather industries, clearly their merger creates the conditions for a rebound because they have a widened range of services and products to offer. When you look at a company like Parcours or Mecaterm, two very different companies, but both in France, based on a very specific model on a niche market. They are growing very nicely, Parcours 9% a year. Mecaterm has experienced a very strong growth of their order book, 130 million euros of order book never achieved by Mecaterm in the past. And even some companies that have been in a very harsh environment, notably in Southern Europe, like Materis Paints, are in a rebound mode and have developed new products, are expanding their network of stores in order to benefit from good internal growth in the coming years. Obviously, the cherry on the cake was IHS because it's a phenomenal growth that is experienced there with IHS. But each of these companies had their model, including our last very tiny and promising Japanese company, NOP. They presented a model they call revolutionary, based on innovative products that are really quantum leaps for their business.
Now, this Investor Day is held at the end of 2014. That's not quite halfway in the 2013-2017 strategic plan, and yet we can still today give an update and confirm or not the outlook for the rest of the plan.
Sure. All these growth drivers drive value creation. So clearly we are on our roadmap for value creation. We are on our roadmap for investment as well. We had said at the beginning of 2013 that we would invest 2 billion euros of equity over 4 years. After a little bit less than 2 years, we have invested 800 million euros, and we are announcing a new investment today. So it will be close to 1 billion. Clearly, we are doing what we had said. 1/3 of these investments were supposed to take place in Africa. Done. We have invested nearly 700 million euros in Africa. We said that we target 1/3 of our investment in North America. With the acquisition of CSP Technology announced today, it will be not done but started. That's a new trend because our previous investment in the US dates back to 2006 with Deutsche Connectors, which was a great success, by the way. And 1/3 of our investment is supposed to take place in Europe, and we are actively working on that. We still have more than 2 years down the road to carry out this objective, and I'm pretty sure that we would be there. That being said, we are also working qualitatively on the diversity of the businesses and the market trends on which we bet. So we have continued diversifying our portfolio. We have invested in telecom, insurance, machine tools, now plastic packaging. All these areas are absolutely new for Wendel, represent a real diversification, whereas construction only represents 23% of our value today, together with renovation, so much down compared to the 60% that we had in the past. We are also following our roadmap from a financial perspective. We have been back upgraded to the investment grade status, and obviously for our shareholders, we stick to our commitment to increase the dividend year after year.
Let's do a spotlight on CSP, which you just acquired. So that's today's news. What can you tell us about this company?
This is really a great company. Typically the company we were looking for. This is what we call in our industry a primary deal. We buy the company from a family of entrepreneurs that have developed the company first in New York State, then in Alabama. They have created a subsidiary in France, which is something that was of interest for us in Alsace, clearly giving us an angle to better understand the company. This company produces vials, high-performance vials for notably the pharmaceutical industry. The type of vials people suffering from diabetes use for the blood strips that they use to test the glucose in their blood. So that's they need to be to have some specificities, notably to be desiccant in order to keep the strip in a perfect state. These type of vials are also used in the confectionery industry, in the dairy industry, in other food or consumer good industry. So it's the end users are quite different. The customers are everywhere in the world. The plants are in the US and in France. And we see a lot of new application that could be launched based on the patent and the innovation capabilities of this company.
And finally, since the last time we spoke, you increased your stake in IHS. Would you like to make a comment?
That's right. We have deployed now nearly $800 million in IHS. It's a big success. They have raised the largest capital raise ever in Africa with $2.6 billion over the summer to finance two major deals when they acquired more than 10,000 towers during the summer, doubling their size. They have achieved this year the objective they had for 2018. It's an hyper growth that is financed by a string of high-quality shareholders. We are the largest one with about 26% after the capital increase, but you have big names like the GIC of Singapore, like Goldman Sachs, Macquarie, or some African investors. We are very confident that it will create a lot of value in the future. And we have always said that it was a sort of a capital development deal, not an LBO type of deal. It's a deal for long-term investors that are really able to support the growth and development of the company.
Frédéric Lemoine, Chairman of the Executive Board of Wendel, thank you very much.
Thanks to you.